gross domestic product, that is GDP, compared to 4.3% in the year ago period and 5.4% in the previous quarter. And we are joined by Sidhant Sibal, our correspondent, to give us an input on that. Now, Sidhant, tell us all-time high CAD. In a layman language, explain to us that how does it impact the Indian economy?
Well, CAD is current account deficit. It is the sum total of, or should I say, subtraction of the inflows and the outflows of the money, or should I say, the dollars into the country. Well, I would like to start. There's the good news and the bad news. Well, the bad news is that current account is 6.7%, very big, very large. The good news is that the Reserve Bank of India has said it could be easily financed. Secondly, everyone was expecting that the third quarter CAD will be very large. In a sense, it will be around 6.7%. For the quarter 2, it was 5.4%. For the first quarter, it's 3.9%. 4% is the red line. Remember 1990s when we saw the balance of trade problem, it was 4%. This year we have crossed that 4% into 6.7%. The reason is basically there are two major reasons. The imports are huge. Two major imports is imports which are causing the problems. One is oil. Dependency oil cannot be reduced. You know it very well. India is an energy starved nation. We need to import our oil. The second is gold. Everyone is clamoring for it. We have seen the finance ministry officials running to curb our gold appetite in a sense. But you know, it's like an Indian thing to we see gold as a safeguard.
Fair enough.
And of course, exports. Our exports have been declining for 9 months. In 2012 we saw the exports reducing. Only in the first 2 months of this year, 2013, in January and February, we saw green shoots of exports. In January, the exports was 0.8%, and in February, 4.2%. Now, finally, what is the solution? The solution is, well, government had announced on 1st of January export boosting measures, and next week will be the D day, I would say D week for exports. Why? Because the EXIM policy will be coming. It will be the way to boost our exports. We remember that in the budget, the Finance Minister P.J. Raman clearly stated, my biggest worry is CAD. And of course, later on he said, to finance CAD, we need to emphasize on more of foreign inflows into the country, and that is why he has announced lots of measures. And of course, the fact is RBI has also flagged concerns over CAD.
Fair enough, Sidhant. But now these are the long-term measures which you are talking about. But in a short term, yes, current account deficit is really cause of concern. Very briefly, if you can explain to us, you talked about a good news, Sidhant, that RBI can finance it. Now, do you think that would be having a negative impact on the rupee as of now?
RBI said that it could be easily financed. Why? Because especially after January 2013, I would say, lots of measures were announced so that foreign inflows can come into the country. Remember, CAD can be reduced only by making sure that lots of money come into India, and for that we need to make the country more investor friendly. In a sense, a perception has been formed for India that the foreign investors are not welcome. But this current finance minister, after taking over charge, especially after September, he made sure that we are taken as a country which is growing and booming economy. And everything depends on how investors see us. Of course, how CAD is important to us because in effect, everything is related in the economy, whether it's fiscal deficit, inflation, exports, imports. It impacts the common man because everything is interlinked. And if our CAD is controlled, inflation is bound to be reduced.
Fair enough.
So that is why we need to reduce our CAD, and the positive news is CAD for the fourth quarter will be less than 6.7% because of the various policies announced by the minister.
Fair enough, Sidhant Sibal.